Hi everyone, welcome back to Be Rich. It's me Vinod here again, end of day number 2 or day 246 on our count. What is this count? 246, yesterday was 247, 246 is the number of days left in this year for us to invest in. The market days, like I said, the 3% if you remember. If you haven't seen that, do catch that video before where it's spoken about our challenge for this year, how spending 3% of our time, that is this year, that we can accumulate and grow wealth, which will take care of the 97% of our time 15 years from now. That's the idea behind this countdown which I'm doing. So I hope you did manage to do some small investments today in different coffee ranges, as we always say. Nothing too big, just something to keep you in forward momentum, as we would say, in anything which you want to build a habit on. So if you haven't and you missed out today, also no worries. Today is only Thursday, tomorrow's Friday, we have another day tomorrow. When the market opens, to look at it. At the time of recording, the markets have become very positive and very buoyant. It opened up a little neutral in the morning, but then it went on to a swing, and most of the stocks we usually have in our list have all turned out to go very positive. Some are even up 3-4% as I'm recording this. But what I want you to keep in mind is we can only invest in the markets which are available to us. And whatever the market is today, you have to find some value in that and invest. Don't get swayed by seeing a stock which you've been eyeing for a long time go up by 2-3% and think, okay, today it's an expensive day, I will not invest. That's not the mindset you should have. The mindset you should have is it in value today? Value means price to earnings. Is it reasonable what the market is asking for it? If it is, then you should look into considering it. It opened at 700 rupees yesterday, it closed at 700. Today morning it went up from 700 to 705 rupees, and that means it's going positive. There is no point buying it today. That is not the right way to look at it, because we are value buyers. We're not trading in this. We're not trying to short it or do any other things which a lot of other people do in the market. We are not there in the market to do that. We are here to accumulate these stocks in the long term. So regardless of what the market is saying, positive or negative, if it's still in your range of what you consider value, do consider investing, because I see a lot of you getting confused about this. And I'm saying, did you do anything today? A lot of you are saying, no, a lot of things are too positive. So it's not gone from a PE of 8 to PE of 20 or 30 overnight. That will not happen in a single day. So do keep this in mind when you're looking at the market. Talking about macroeconomic news, there was a lot of news and analysis on what happened last year regarding the rupee and how the rupee has deteriorated in value by almost 3%, and how this has led to returns for people who are outside India, investing in dollars in India, seeing their returns evaporate because the Indian rupee has been sliding. And this has led to not such great returns for foreign portfolio investors and foreign institutional investors in India, and how the domestic retail investors, institutional investors have been supporting the market and prompting the market up. That the DIIs in India had invested almost 180 or 185% more than they have ever done. And considering all things, historical average of the Nifty PE, that is 10-year average, is around 24 and we are 21. So some people are saying we're undervalued in terms of that. But if you look at sectorally, a lot of our sectors are still very highly overvalued. So there are going to be opportunities. What does this all mean? All this means is the rupee is expected to decline further, putting more pressure on the foreign portfolio investors in India and the foreign institutional investors. Even if they see Indian earnings improve, corporate earnings improve, they have to be very calculated in their approach, making sure in a diminishing rupee, they can still make a good profit. If they don't see it, there'll be selling pressure in the market, and there might be more opportunities for people like you and me to buy. Talking about selling pressure and price movement in the market, I want to talk about ITC. ITC's demerger has been making a lot of news and speculation on this. Some of it I can't understand why. Some of it maybe I can understand why. There's a lot of speculation in the sense that what is going to be the listing price of ITC hotels. That price discovery is what everyone is trying to get, because it's important to know what the price is going to be. And starting at a range of 25 rupees, now we're in a position where a lot of people are claiming that ITC hotels will be trading at 300, and ITC itself is projected to be trading over 500 in the next 2 years. I don't know. Is this possible? I can't see it is making sense, where the ITC hotels, which only contributes to around 5 to 6% the earnings of ITC group. How that alone now can be valued at such a extreme amount at valuations of 28 times, 30 times earnings. So we'll have to wait and watch. This will all get clarified very soon. As far as I'm concerned, the way I would ask you to look at ITC right now is ITC of value right now? Should you consider it? Both of those questions are yes for me. The answers are yes for me for both those questions. Is it of value now? Yes. Should I consider it? Yes. And what should you do when ITC hotel stocks are allocated to you because of your holdings of ITC? Hold on to it. Don't sell it. Would be my advice. Should you be buying more ITC hotels? Don't rush out and buy ITC hotels as soon as it lists in the market, because BAT has made it very abundantly clear that they don't want to hold any ITC hotels in their portfolio, and they plan to sell whatever is allocated to them, which will be a huge chunk of shares because they own a lot of ITC. So they're going to get quite a bit of ITC hotel shares, and they plan to dump it as soon as they get it and pull their money out. So when that happens, you're going to see price correction. And if there's an opportunity there, I will definitely come. My brother will come and tell you, hey guys, maybe you can buy some ITC hotel. My brother had said in a previous video that you can look at buying ITC hotels at this point when it does list, if you're willing to hold it for 10 to 15 years, meaning you buy it and you forget about it for 10 to 15 years. I don't know how many of you are in that kind of frame of mind or have that kind of capital where you can sacrifice investing a huge chunk into ITC hotels and then forgetting about it for 10 to 15 years. So my advice would be to be a little cautious. Wait, keep buying ITC as of now. Once the record date is over and it's listed and we understand what is happening, and if once BAT starts dumping, at that point of time, we'll understand a lot more about the price discovery and the valuations and the sum of parts, and we will take a call on it at that point of time. I would not advise you to do anything other than that rash. There is no real arbitrage to be had at this point of time. There's a lot of people speculating, saying you buy an ITC hotels will go 300, then ITC itself will be valued at 400 and that will go to 500. They're doing all kinds of calculations in forward earnings and all that. I don't believe in anybody able to forecasting the future. So I would rather buy on today's value and see where I go seeing forward, rather than trying to speculate and take a gamble on this, because even if ITC hotels is listed at 300, I still don't plan to sell it. So I don't understand what the rush is. The other thing which I wanted to talk about, how I spoke about ETFs in the Indian market and how we can use that to invest in. The same is true for the American market. Those of you who are interested in the American market, who are looking to wet your beak in the American market, there are lots of ETFs there too. And how we have sectoral ETFs here in India, there are sectoral ETFs there in the US too. There are, of course, your S&P 500 and then you have the Vanguard funds. All of them have many ETFs. The ETFs there in US are far more complicated than the ones here in India. So I think I will discuss that in a greater detail in the next video about ETFs which you can look in the US as you learn about more stocks in the US and how to invest in there. Anyway, I hope you found this video informative and entertaining. Tomorrow is the last day of the week and it's day number 3, and I want you to think about investing in the morning when you get up, like I've been discussing in our group. Again, to join the group, it's very easy. All you have to do is go and check my Instagram profile, which is this. It's my Instagram profile, as you can see. And over here, you have the 52-week challenge group. So you click on 52-week challenge group and it opens up, right? And you can look to join there. I'll ask Rupesh to put a better screenshot of this so you can click on it and join us there. In the morning when the market's open, I do try and have some discussions with you to get into the mind frame to be a value investor, to invest in bits and small pieces and nothing too crazy. So do join us there. We have some interesting conversations. We talk about different stocks and different approaches each of us is taking in the market and trying to learn collectively, rather than this being a monologue where you don't get to interact with me. There at least we all talk together and we have discussions and it's a little bit interesting. Thanks for watching the video. As always, do subscribe to the channel and share this with friends and family, whomsoever might find this content interesting. Nothing else more to say. See you tomorrow at the end of the week and day number 3 of the year. And I wish you all the best. See you again soon. Bye.
Hey guys, that my uncles Vinod Srinivasan, Anand Srinivasan and I have rolled out our Substack, which is basically a blog/newsletter where we're going to post our original research onto it. And we've analyzed macroeconomic trends, and a lot of you know my uncle Anand Srinivasan and I regularly write for The Hindu, and these articles are also going to be made available for you in the Substack. The link is moatinvesting.substack.com. You'll find it in the description and in the video right now. We hope you go check it out. We've put a lot of time and effort into it. And please give us comments and feedback on what you read. Thank you.